This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Ashu Garg, general partner at Foundation Capital. Foundation Capital is a venture capital and private equity company located in Palo Alto, California. Foundation Capital was founded in 1995 as an early-stage venture capital firm. Their fintech, enterprise, and consumer investments have reinvented industries and defined new markets. For a quarter of a century through boom and bust, prosperity or calamity, Foundation Capital has endured, evolved, and thrived with over $3 billion in committed capital, 28 IPOs, and 80-plus acquisitions to their name. Ashu, thank you for joining us.
Thank you for having me today.
Great. So what was your background before investing in early stage companies?
I spent 15 plus years as an operator, mostly in enterprise software. Started my career at McKinsey, a couple of different stints in McKinsey, did a couple of startups, was a Cadence Design Systems where I ran strategy and marketing, but then went on to 2 long stints at Microsoft, where I both ran field marketing for the enterprise software businesses globally, and then also ended up building out the online advertising P&L for Microsoft. And that was my last operating job.
Well, great. So what excites you right now?
It's a remarkable time to be an entrepreneur and an investor in startups. There is, at least on the enterprise side, there's a fundamental disruption that's underway across the enterprise software stack. This disruption is being driven by 3 major trends. There is machine learning and the use of AI that is transforming the way we think about applications, but it's also driving fundamental changes across the infrastructure supporting that. I think there's the shift to the cloud and to a multi-cloud environment, and that is upending how we think about infrastructure software, how we think about platform, the transition to new platforms. And then there's also a big change from proprietary architectures to distributed architectures and to open source. And when you take these 3 things, all this disruption is creating massive opportunity. And I think we have a 10-year run ahead of us.
It's an exciting new time. COVID has given us a whole new set of care abouts and a whole new startup cycle to work with. So I agree. So what's your advice for people investing in startups today?
The hardest part about startups, especially with the lens I have is mostly around enterprise software, is there's a lot going on. And whether you're an investor or an entrepreneur, you have to pick and choose where to focus. And so if you're an investor, I would say some investors focus on a certain stage. Some investors take more of a sector or a thematic view. And some investors are more people first, and you have to pick. And then whatever your investment approach, I would say get as laser focused on identifying what's your source of leverage, what's your unique advantage. I mean, after all VCs are really just salespeople with fancy business cards. So you got to figure out, what are you selling?
Oh, great. And so on the other side of that table, what's your advice for people running startups today?
As an entrepreneur, you're both in the best times that an entrepreneur has ever had, in the time that I've seen sort of technology startups over the last 25 years. But it's also challenging in the sense that because capital is cheap, there's tons of competition in every pocket of opportunity. So I think the key as an entrepreneur is not to get distracted by all the noise around you. Focus on a clearly defined opportunity. Focus on finding product market fit, and then focus on scaling like crazy once you have that product market fit. So that's one, because it's very easy to get stuck and to get defocused from the hype. So focus on finding product market fit and scaling. The second is, I think, take a 10-year view of the opportunity. Almost everyone I talk to talks about the competition today and how the competitive ecosystem is evolving. It doesn't matter what's the competitive ecosystem today. Even the best companies take a decade to scale. You've got to think about what will the ecosystem look like a decade from now when you're trying to go public. The third thing I would say as a startup entrepreneur that you have to really think about is Go solve the hardest problem you can find in the largest possible market. It's really hard being an entrepreneur, and it's no harder or easier if you're solving a big problem versus a small problem. So why focus on small problems? Pick the hardest problem you can find, go climb the hill that seems almost impossible to climb. And if you do it, the rewards will be commensurate.
Well, that's good advice. So let's talk about the state of investing today. How do you see the industry for venture evolving?
Venture has been historically a cottage industry. If you look at capital deployed in venture relative to capital deployed across other asset classes, it's traditionally been tiny. And I think that's changing. It's a journey. Venture has become more mainstream in the last few years. You're seeing venture firms that look more like asset management houses than they do venture firms. You're starting to see a lot of the growth stage investors coming into early stage. You're starting to see large public market funds like T. Rowe Price and PIMCO start to invest in pre-IPO companies. You're seeing the hedge fund investors start to invest in the early stage. So there's a lot going on. I think it's an industry that is growing up, is the way I would think about it. As it grows up and it scales, there's disruption. And I think there's disruption in venture creates opportunity for new investors.
So what do you think the biggest change you see is coming up next for venture?
I think historically venture has been a business where brands and firms have mattered less than individuals and people. And which is why you see firms evolve and fragment, and from the ashes of every successful firm, multiple new firms have emerged. And even today, it feels a little bit like that. You're seeing the emergence today of solo capitalism as a major new trend. I think over time, we will start to see actually a consolidation, and we'll start to see a handful of firms become money warehouses and have multiple products and have scale. And then we'll start to see best-in-class boutiques focusing on specific sectors and stages. And I definitely think that when things settle down, the industry will look very different from what it does today.
You think a handful of venture capital funds will actually be those money funds, or do you think it will come from the big tech like Google or Amazon or Facebook?
I think it'll definitely be standalone venture capital firms. I think the large platforms, technology companies, they go through ups and downs, and their commitment to investing and to venture goes through its ups and downs. We've gone through a phase that over the last decade, the NASDAQ has grown at over 20% year over year for a 10-year period. So the tech giants have had an enormously successful decade. It's unclear whether the next decade will look the same for them. So I think venture firms, dedicated, specialized venture firms, are here to stay for many decades to come.
Very good. So let's talk about your investment thesis for your fund. It's highly successful. What is your investment thesis?
We focus on two broad sectors. We're very significant investors in fintech. And within fintech as a firm, our bet is that consumer banking and consumer financial services are being disrupted with technology. We're investors in companies like Current, States Title, and many others that are disrupting consumer financial services and consumer insurance. On the enterprise tech, we're very large investors in cognitive applications, or this idea that the next generation of applications will be AI first and will go from being workflows to actually having task automation embedded in the workflows. That's been a very successful category for us. We have startups like Eightfold that are in that thesis that are doing exceptionally well. We've also made significant investments in the underlying enabling infrastructure at the bottom of the stack. So we're seeing explosions in the use of storage. We're seeing the need for next generation of computing systems. And as a result of that, we've invested in Cerebras, which is building out a completely new computer architecture for deep learning and is doing exceptionally well. We're also investors in Cohesity, which is reinventing storage and data management at the bottom of the stack. And then between those, there's two big layers we're very excited about. One is security and data privacy. I think one of the largest challenges for every organization is the fact, and this is not every tech organization, it's every organization in the world, is while data is the new oil, it is also the new asbestos. And every company has to deal with the fact that they may have an asbestos-like liability due to all the data they hold and control. So that's an important challenge for every organization. And I think there's a handful of companies in our portfolio like Skyflow and Fortanix that are going after solving that problem. Last thing I would say in terms of our investment thesis is we're huge believers in the fact that we're seeing an explosion in data scientists. Data science is a category, and it's a very broad category. It's exploding, and there are data scientists of all types and flavors. And at the same time, there's an explosion in developers. Every individual, every professional, every white-collar professional is either a citizen data scientist or a citizen developer, and in many cases, both. And so the explosion in data science and software development is creating huge new opportunities for tooling and infrastructure.
Oh, very good. Well, aside from the challenges you just mentioned, such as cybersecurity and so forth, what challenges do you see your startups facing every day in running their startup?
You know, the challenges for every startup are unique. Every startup is a snowflake. While there are common patterns and common experiences, every founder, every market is unique. So I hesitate to generalize, but to the extent that it's possible, I would pick a couple of themes. I think in the early days, finding product market fit is really hard. And it's an art, not a science. And so you have to know, but that's the focus. Every company has to really laser. The only thing that matters in the early days is, do I have product market fit? Once you have product market fit, the most important question you have is, do I have a scalable, repeatable go-to-market process? And you know you have that when the average salesperson can sell the product to the average customer without anyone from headquarters being involved. And that's a very high bar. But once you can clear that bar, then sort of all the issues around company building and company scaling, getting the right leadership team, and all of those things kick in. But I really focus on the first two sort of milestones.
Well, great. And so on the other side, for investors, what do you think the main challenge for the investor is in today's climate?
The world around us in startups, because of all the opportunities, we're in an opportunity-rich environment. And when you're in an opportunity-rich environment, the hardest part is focus. It's very easy to get distracted by the next shiny new object. And I think that's a challenge for most investors. I think the second challenge for investors is applying the lessons of the past to the present and the future and doing it appropriately. On one hand, we'd be foolish not to apply the lessons of the past to the present and the future. I mean, that's what experience is. On the other hand, it's also what bias is. And so you have to make sure that you're leveraging your experience, but not translating that into a bias. Just because a certain type of individual was successful in your prior life, or just because your experience has been with a certain class of people, that doesn't mean that's the only class of individuals that can be successful in the future. So being open to possibilities. But that balance is really hard as an investor to maintain. What was true yesterday may not be true today and tomorrow.
Well, very good. So you see a lot of different applications and sectors out there in the market. If you had to pick two or three that you think are good immediate opportunities for investors to pursue, what would you recommend people look at today?
You know, I always think that investors need to take a step back from the specific and zoom out to say, what are the biggest macro trends in society? And I think one of the largest macro trends in society is this notion that while data is the new oil, it's also the new asbestos. And that macro trend, I think, creates massive opportunity. The second big macro trend, I would say, is every company is becoming a software company. Nike is a software company today. Vale, the mining company, is a software company. Goldman Sachs is a software company. And in a world where every company is a software company, every company is also getting into the data business. So if you imagine a world where every company is a software company and every company is in the data business, there's a huge number of downstream opportunities from that are implications of that macro trend.
So in the last few minutes that we have here, what else should we cover that we haven't?
I think the lesson I've learned after having spent more than a decade, frankly, failing more often than I've succeeded with early stage startups, is you've got to start from first principles, and you've got to focus on the people, and you've got to focus on solving really hard problems that matter. So that would be my advice. First principles, focus on the people, solve hard problems that matter.
Great. Well, I appreciate your taking time to share this with us today. How best for listeners to get back in touch with you?
My email is the best way to reach me, agarg@foundationcap.com, and try to send me a targeted email. You've got to find a way to communicate in the first paragraph or two why what you're doing is a good fit for me. And I will read every single email I get. I will not respond to most of them. And so just for practical reasons. So if the first paragraph gets me engaged and it feels like this is something that's a fit for me, you will hear back from me.
Well, that's good advice for everybody. I want to thank you for taking time to join us today and hope to have you back for a follow-up soon.
Absolutely. Thank you very much for having me.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org.
Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.